So there's something called, what is your current approach to saving money? So currently you have like, I've saved a fixed amount regularly. I save whatever is left at the end of the month. I want to start saving, but haven't yet. I don't save at all. Whoever is joining now, so we're doing a quick poll to understand what is your idea about personal finance or saving money. So we're just doing a poll to understand what is your knowledge about it and what is your understanding before we start the session. Ashish, in the meanwhile, would you like to test your screen or something? Is it fine?
Sure, I will.
Can I quickly get answers to it? Uh, yes. So I'm ending the poll. Let's see what is the answer. So a lot of people say like, I want to start saving, but haven't done. That's like 45% of it. And there are students who I say whatever is left at the end of the month, that's 25%. And I save a fixed amount regularly. So that's good. 24% of them say that. I don't save at all, 6%. I think this session is exactly for you. So let me just stop this. Getting back. So I think we can start the session. So I would like to introduce everyone today to Ashish. So welcome everyone to this new edition of Mentor Talk. So our flagship series that bridges classroom learning with the real world life skills by connecting the students with impactful mentors from the industry. So the idea is that, and this is today's session is also a part of Amritkaal Mentor Movement, a national initiative by MentorCloud, inspired by the vision of Viksit Bharat 2047. And the idea is to bring practical career shaping mentorship to the students across India. And today we have with us Ashish Lalwani. He is a financial planner at Fintoo, where he helps students and professionals to develop clear, practical money habits. And he specializes in budgeting, saving, tax planning, and goal-based investing, and simplifying of personal finance, so anyone can get started like with a small income and then maybe go to a big one. uh, and he also has a financial literacy is a like, and he believes that financial literacy is a life skill and not just a professional one. And today he's here again to bring in some confidence in us, like it is easy to manage money. In a very maybe I guess in a very simple term, I might be telling that acha, managing money is easy, but I think Ashish would be much better person to tell that. Thank you so much everyone for joining, and over to you, Ashish.
Thank you, Riddhi. So, before starting, I will just introduce myself. I have completed my PGDM in finance and I have done my graduation in BCom. I am currently a financial planner in Fintoo in Mumbai. And previously, I have worked in Motilal Oswal, Bangalore, as a wealth management intern. So, this session would be more interactive, more proficient, and I would be sharing you all the experience I have got in the corporates. So be feel to interact, and any hesitation should not be there for asking any questions. You can just raise your hand or just type in the chat, so we can interact between the session also. So this session would be completely into the finance, what it is, how we can start, and likewise you are sometimes saving money for the budgeting, but sometimes unable to match the goals because you might end up losing the money or using the money in a certain way that you have used in your prior practices let's say you have went to cafe, you might gone to movie theater or any personal uses. So in this we will prioritize how we can save money, how we can budget it, and how it should be in a proper way so that you can get your goals fulfilled in a short term or a long term manner. So, intro, giving a proper introduction, what's personal finance? So, it's basically managing the money efficiently by budgeting it out. If you are, suppose you are getting 1000 rupees as a pocket money, and how efficiently you are budgeting it out, how much you are using it, your investing, savings, or any of your expenses. So, there are many expenses for the day to day. I would like to know what all expenses you all have in a day-to-day life. You can just comment it out. So we can make a short plan for you. And I would also share a sheet so that you can also plan out your all the expenses and how you could be investing your money in a much better way to get your all the goals accomplished in a short term and a long term manner, whatever tenure you are looking for. I can hear. Can you just write it down what all expenses you are looking in a short term and long term manner?
You all can write your questions in the Q&A section or in the chats.
Until you write the questions, I would move forward. Like, as per a study, 70% people worldwide are a financial stress because they are poor into plannings. As people are unaware about the financials, how they need to manage, how need to budget, and how need to save the money as per budget based investing or goal based investing. So, as per Consumer Financial Protection Bureau, we can see that 70% of the people are in the financial stress due to they are unaware about the financials, or they do not follow the principle of saving, investing, and goal based investments. So we will be talking about how we can manage it out in a proper way so that we do not end up in such a financial stress, right? So the first section for this webinar is with starting with our main thing, that's budgeting. The core of this is basically how much money you are spending and how much wasteful spending you are doing and how we can cut it down and reduce the budgeting for other things like you may save for emergency purpose, you may save for goal based investing, like you want to purchase a laptop, purchase a vehicle, anything as per your wish. So there are two things in budgeting. Something is called want, which are the things you just not need right now. Maybe in future you are wanting it. It's a wishful activity. But needs are something which you really want and which you need in the day-to-day activity. So which can't be wishful, it's a mandatory expense. So the mandatory expense should be taken into consideration and it should be always in the budgeting part. The wishful is either or you can or you might, if you have surplus money, you can go for that. So there are two type of decisions we make during a purchase or during any expenditure. First is the compulsive buying. In compulsive, it's like whenever you go to any hotel, any cafes with your friends or family members, you end up spending on tea, coffee, or food, or anything which it might not be necessary at that moment. It's a compulsive or it's a repetitive or ritual behavior which due to like whenever you go to DMart, you might be compulsion, like if you have money or you not have, but if your friends are purchasing something from the DMart, you might end up using extra money because of people are similarly buying, and you might not be aware at that particular time, and you just purchase the things across any section which might not be useful as of now. And it's basically like if you are going to some clothing stores, there are compulsions like they might be giving you higher discounts, so you might end up spending more. Likewise, in today's scenario, we see like online shoppings are being on trend. People are using much handy usage of mobile apps, and every time you are getting a notifications from Zomato or Flipkart or any other platform, so you just see all the things and start spending across, because the usage of money is just on your fingertips. Previously it was not. You were accountable of all the money you have in your pocket money or your purse, so you spend wisely before taking out any money. But nowadays we have the bank accounts, and it's very easy to spend money rather than saving it across. The second part is the impulsive, like they are unplanned or they're mostly due to the desires or your wishful thinkings. Because likewise I told, if you're going for online shopping, or if you got an update from Zomato, so you might get ending up ordering some food which might not be the need for your point of time. So that's also need to be considered, taken into consideration before moving forward for making a budgeting and using the all the money or the all the resources in a much better way to get all your short term and long term goals accomplished. That means if you have any goals for your studies or any courses or anything you want to buy on a short term basis, so you need to save the money for that circumstance, and that would be very helpful for you, so that you can be a financial literate, and also you should not be dependent on anyone else, and you would not be in a financial stress if you do not find it, or if you do not accomplish it on time. Talking about budgeting is basically the basic rule which is being followed in the theoretical way is 30-20, 50-30-20 rule. That means 50% of your income is always gone to rent or food or anything which is a needful activity, and the 30% of the thing of the money you are spending it out on a leisure things like dining out. You might go to movie theaters or anything which might be of your play, like going to swimming classes or anything which you really want to look for. And 20% should be on the saving side, so that it can be used for a later stage. If you are a student, you might get example of 1000 rupees monthly, so you can use 500 rupees for your need based and 300 for your wants, what are leisure activities you want to do, and you must save 200 rupees. It's just an method, it's not applicable for all. You might ending up using all the money, you might save all the money. It's up to the circumstance of everyone day to day activities, but it's basically a rule which we must need to follow, and we need to try to save as much as possible, so that at a later stage you can get whatever you want, and you won't be ending up on a financial stress. That that would be a useful for your later. As you save money, you can secure your future. So in this we try to save first, so you can use this money for a fixed amount. Like I told, you can save a 20% of your total monthly income or monthly pocket money you are getting, and you can just allocate it as per your needs. I would be coming into later part, that where you can invest, what percentage of returns you would be getting, and how easily you can manage it out. as a short term on a long term basis. The zero budgeting space is like you are just allocating all the money. If you're getting 10,000 rupees monthly, you are just allocating all the money for all the circumstances. Like if you want to go for expenses, this money is for expense, this money is for savings, and other for investment. So it's up to you which method you are using. It just means that you try to not use all the money for your expenses, but you need to save a little bit more and cut the unnecessary expenses so that your future or anything you want for short term goal basis you can accomplish in a better way. There is also called envelope method, in which people try to save money in an envelope, and they start using this for their cause. They might have going to classes or movie theater or any of the leisure expense. Once the money is fulfilled or used, you are not utilizing any of the other savings money from the pocket. So this can be also taken into consideration. Like you can start using, like if you have 6,000 as your expenses, so there might be 3 to 4,000 as your needful expenses. 2 to 3,000 might be your wishful expenses or the leisure activities. So you can try to use that money as for your envelope method. And once the money is finished for the leisure activities, you try to cut down, or you should not spend that much money on that month. You can allocate it for the another month and use your money wisely. There are saving buckets, like there are now jar apps or other platforms where you can save money for your wishful activities, and once your jar is fulfilled, you can use that money for your particular goals. Any questions in between, you can just message or type in chat. We can discuss it out. The second section is just for savings, how much you need to save. There always a safety net, which are the unexpected expenses which might occur due to your leisure activities or due to an emergency coming into near future, which is misfortune. Sometimes there might be an misfortune of accident or any which should not be happen, but yes, it may come into circumstance. And if you are working class, there might be a expense for if you are getting laid off or anything misfortune happens in your life. You can just use 3 to 6 months money as an emergency corpus, so that it could be in a liquid account, let's say liquid mutual funds or saving accounts, so that you are not ending up on a financial stress. Why to save money? Because saving for emergency funds is basically like if you are not having a surplus of money and you got any external expenses which are not into your bucket, so you might end up using your credit cards or any other instrument which are expected to a higher interest rates on your loan side or on your debt side, which might get you on 8 to 18 to 36% of your interest. So that might draw your total wealth or the money you have saved. So it's better to save accordingly your wishful expenses and your need-based investing, so that you can manage out your all the daily expenses and try to use the money in a much better way to get your all the goals accomplished at time. And you might ending up saving much higher than previous, because you are now cutting out your wasteful or need wantful activities, which are just wishful activities which should not be there all the times. But yes, it's up to you when you should use the money, when it feels better to you, and when it's a meaningful expense for you. And it should be always for a growth perspective, not just wasting the money for any other expenses. We should always take care of the debt management, paying the higher interested loans or debt first, and try to reduce the debt burden, investing in stock markets, like you might have heard about mutual funds, equities. So it always comes with the risk appetite. How much risk appetite do you have currently, and how much you would be really taking into consideration? So we first take into consideration of the risk profiling, how your past investments have been, how you are taking the things forward, and how much money you are really going to lose, how much you can accept to lose, and then only we can look into how much risk you should take, because every investments come with a market risk. There's something called how to save efficiently. For this, you can just save like for your small savings consistently on a regular basis. Likewise, mutual funds are there for the SIPs. For goal-based investing, you can use your income in much better way. Like for short-term goals, you can go for the liquid funds or FD kind of thing, or there are recurring deposits which might be helpful for your short-term goals of 0 to 1 year. And if you have a midterm goals of 1 to 5 years, you can go for balanced advantage funds, which gives you around 7 to 10% of return. So these are basically a investment habits. It cuts every month from your bank account so that you end up saving something, because you might all the money you have in your account, you might use it for any of the purpose if you see it's on your account. But if you are investing somewhere, you might think it has been gone, and whenever you see after 3 months, 6 months, or a year later, it would be much grown in a better way, and you can start using that money so that your goals or your wants which are unfulfilled, you can use for your leisure time, and you can use for the productivity how much growth you are getting from that. You can use it for any of the courses you want. Also, you can use it for the accessories like mobile phones, laptops, whatever you want, you can use for as a goal based investing. It just basically means whatever short term or long term goals you have, you started savings for that, and you start investing in SIP or any other funds which is as per your risk appetite and your and tenure, as per the time horizons mentioned below, and you can just chase it out how much extra money you would be spending or how much extra you need to save so that your goals are being fulfilled. There are bucketing sizing, so we segregate funds for every goal. You might have a goal for purchasing a cell phone or a laptop, so we can just mention now, if you have a goal for 10,000, 20,000, 50,000, you can just divide into a yearly basis or monthly basis, so that you can get how much monthly you need to save to get accomplish that goal, and how easily you can get the goal by investing in SIPs of different asset classes. So I would be talking about different asset classes, where and why you should invest, so that you can accomplish a goal, as well as you can get the returns higher than the inflation. Let's suppose current inflation is around 3 to 6%. So if the inflation is 6% and you are getting a return of 6%, you won't be getting anything extra. The money would be at a same level. If you are buying the mobile phone for the 10,000 and it has increased by 6%, that the return or the money inflated would be at a same level. You won't be spending higher, because the inflation of the products would be also at a same pace. So you need to increase their money in such a way so that you can get extra whatever the inflation is there. Let's suppose 6% plus 2 or 3% extra return, so that your money is also growing with the inflation in the markets. So for this, there are options for safe investments. So you can go for liquid funds, FDs, RDs, which gives you 4 to 7% return. This is a traditional method which people do follow. But nowadays, people have started shifting into a moderate phase, using a short risk or a bit higher risk than these safe assets. These are market linked risks. In the debt funds, there might be bonds for RBI, there are bonds for corporates which have been mortgage backed. They are much safer, and you can start investing in those so that you can get a higher returns of 7 to 10%. They are hybrid mutual fund which are linked to equity, so they have a 65% of equity linkage, and they are always invested into small caps, mid caps, and large caps. And 35 to 40% is used for the debt instrument, so you get a balanced approach between your investments, and you do not ending up losing money at a higher pace if the markets do turn into a turmoil or a downturn phase. There are two turns in the phase. First is a bull run, and second is a bearish run. So in a bull run, market always move upwards. Likewise, we have seen after 2020 COVID, the markets are being in an upturn and getting a higher returns for all the investors. But sometimes it's like the market is also shifting the cycles to a downturn mode. So at that time, these asset classes would be a much riskier, and you must shift your asset classes into the safer haven like FDs, liquid funds, or commodities like gold and silver. So the reallocation and rebalancing comes into this picture. So always you need to take care of every month or every quarter. You need to try to see how markets are going on, and you can just shift your asset classes as per your goals. If you have a goal of, let's say, after 5 years you want to purchase a vehicle, so what you can do after 4 years, you can just shift your assets from the equity funds or equity side to a much safer assets for the liquid funds or the debt part, so that you should not affect your goals from the market outlook. It might be positive or not negative. The markets in effect should not be seen your goal, so that you should get your goals accomplished during the time of retirement. Sometimes people want a retirement goal if they are aged more than 40 or 50. So we always prefer to get their investment done into the safer havens like liquid funds or FD during the retirement phase, so that after retirement they get a stable returns, and they can always get a established corpus, so it would be useful for all the after retirement things or expenses. We probably see that people are unaware when to retire, how to retire. So we have a sheet where we try to get all the data, like how much savings you are doing, how much expenses you are doing, how much income you're getting. So after that, we see how much extra money you are having after all your expenses, and we try to save it in a much better way to get it done. Investing in such a way, like there are three asset classes basically: equity, debt, and alternatives. So in equity, all the equity related instruments with link to markets, stock, mutual funds, EMS, other services which are linked to markets, we try to invest in them. And it's much better to invest in things which gives you a higher return as per your risk and as per the time horizon you need to invest. If your goals are below 1 year, you must go for liquid funds or a safer asset, so that you would end up saving higher, and you should not be affected from the market fluctuations or the volatility comes into picture. And for the moderate or for a long term goal, you can always go for the equity side or the market linked products, so that you can get easily 7 to 10% return. Or if you want to go for a aggressive mode, you can always get 10 to 15% return. If you see our Nifty as an index, in the past 20 years, it has given 12 to 14% returns. So markets are pretty good for a long term investments. instead of going into the traditional investments of FD or any other RDs. So you should not save money in the saving accounts. You must try to save or start using SIP as a product so that it could be managed it out in a much better way, because SIPs are like you always invest in a downturn as well as upturn. So the averaging is done. So there's never a chance that you are using it as a instrument, like you have purchased on a higher rate and now you are saying that your assets have been turned down. So it's aggregate, average it out, always deploying in every month basis, so that your investment it's grown in a much better way. So you can easily get 10 to 15% of returns in the growth strategy for investing in SIPs of multi assets or hybrid mutual fund. So this can be used as a strategy for your goal-based investing. You can start as SIP for any of short-term or long-term goal, so that you can accomplish that on time, and you should not spending, because if you want to spend that money, you need to exit it from, or you need to redeem the shares from mutual fund. So you would be aware that your money is been investing in much better way, and if the goal comes in near picture, you can just redeem it out. You can get the money in 1 or 2 days in your account. So that would be much beneficial for your investing rather than keeping money as an investment in your saving account. Any questions, you can just ask it out, and I would be really happy to answer that. I would also share a screen where we do take data, so that it would be helpful how you can write down all your data into single thing. And I think my screen is visible. So if you have a goal, like Akansha is saying, how to plan a budget in academic year for future business investing and growth. So what you can do, if you have any surplus money or you are getting any of your money, let's suppose you might be getting a pocket money or you have a past surplus or your savings. So you can map it out how much horizon of tenure you have, how much risk appetite you can bear, and then you can think of investing in asset classes such as equity, mutual funds, to get a higher return. And whenever the goal comes nearby, you can just shift your money from equity linked product to much safer assets like bonds or liquid funds, so that you should get the money at your planned time or whenever you want to start your any of the investments or your business or any of your goals. Ashish Makram says, what strategy or best practices would you recommend to effectively manage your finances to avoid overspending? So, Ashish, what we can do is we can just, I would be sharing this sheet. You can just write down all the expenses on a monthly basis. What do you spend? How much you get? And after that you can see how it is benefiting out, because after a month, if you see, there are things like there are two needs and wishful methods. So if it is a need based thinking, like if you are paying rent of you are spending it on food, so you must get continuing for that. And if it isn't wishful activity, you can try to cut it down to get your money uh, not spending over, and just start saving that money. And if you have the money in your account, definitely you would be started spending it out. As we have certain clients, if we say that you need to invest in certain asset classes, If we left them with their money in their accounts, so definitely they end up losing the money in some other activities, or they use it in a leisure way. So always try to use a money in a SIP or any other instrument, so that you can save and it should not be affecting your all over expenses. And you need to try to save a bit more every month and cut your expenses if possible, so that you should not starting on overspending. Sometimes it's like whenever you go outside, you might end up spending much with your friends and all. So you should try to keep that calm into your hand or in your pocket, so that you can start using any strategies which can be used for effectively. Like in this expense profile, you can just start writing down all the expenses you are using for groceries, utility bills, fuels, household expenses, so that every month you would be getting a rough idea how much you are ending up with expenses. And you need to think twice, is it really needful or necessary for me? And if it is really, you can go for that. If it's not, you can just try to avoid or reduce it throughout the year or throughout the time, so that you can end up saving money in a higher amount or much efficiently. And try to invest that money so that you can't see in your account, and that would be much helpful, that you won't be spending until it's invested, right? Anyone else have any questions? So I would be showing you how we take data. So basically, we try to write down the client's name, the age, whatever he is born at. Let's suppose you are born at 2001. So after taking your age, we try to see whatsoever you need for goal based investing. Let's say you have a goal for vacations, car purchase, or retirement. So we see how much assets do you have, what all currently your liabilities or obligations you have on that, and we see how much annually you are earning and how much outflow on an annual basis is being done. So firstly, for the outflows, we need the current month expenses, which can be used as how much savings you can do. So let's suppose you use 50 rupees for utility bills, 100 rupees for fuel, 200 for household expenses, 200 for medical, subscription for 100, and 150 for miscellaneous expenses. So if you are having 1000 rupees and you are expending around 800, so you can save it around 200. So every month you need to look at your expenses, how you are managing it out, and how frequently you can use this as a method for saving and investing in the any of asset classes, so that your goals should not be affected, and you should not be in a financial stress whenever you need money. So Prashant says, being in college, parents won't allow investing in share markets and related things. Which way should you suggest throwing 10K from pocket money? So if you are saving 10K, so what you can do, definitely on a traditional way, parents won't be allowing you due to lack of knowledge or lack of understanding of financial markets. But if you see 20 years past returns of Nifty on an aggregate basis, it has given 12% of return. So yes, you should not go completely into investing into the financial markets. But yes, SIP is an instrument which can be very useful for you, so that you can start investing 500 every month, or 1000 or 2000 or 5000, whatever money you can save across. And uh, it's like I told, there are balance advantage fund or multi asset fund which invest in debt instruments as well as equity markets. So debt instrument basically means the bonds, like the government have the RBI bonds, which are asset backed and which are very safe, as per, it's similar kind of FD kind of thing, and in that you get a higher return. It's up to you how well you are aware about the market. You can read it up in a particular manner. Like there is an site called NISM, that's National Institute of Securities Management. So in that, firstly you need to get the knowledge how the markets work, where are you investing, because whenever you are investing, you must be aware that the money you are investing is going in a certain way, that it should not affect all your expenses, and you should be aware that how it would be useful. Like shares are basically you are purchasing an ownership of the company, and whatsoever returns you're getting, it's how the company is performing. So I won't be saying parent doesn't allow, it's about educating them. It's not, it's like they are unaware about all the things. They feel the markets are being speculative, and I think it's pretty simpler that if you are going into anything, until and unless you are unaware, it always seems like a risky thing in your life. So you must be aware, you must be equipped with a very wonderful knowledge, so that you should also be understand that where are you investing, where your money is being going to be deployed, and also you can make others aware about that, so that you are not ending up into vague arguments with your family or friends. Because sometimes it's like people are unaware, like it's in growing phase of markets where people are investing. If you see the data, 3 to 4% of Indians only have the demat account, which means if you say we have a population of 100 crore, only 3 or 4 crore people are into the financial markets. If you compare this with US or any other developed nations, there you can see more than 70% of the population do invest in the financial markets. So you can see how drastically they have been growing due to this, and how much returns they are getting from the markets. It's not only about returns, it's about if you have money, how easily you can invest in certain companies which you are liking, or in the sectors you are really looking a positive thought of. Like there are companies like Tata, Reliance. So if you have any knowledge of their business model, how they work, and if you want to invest in their company in a much better and a regulated way, because SEBI as a central body which is always there for making all the things in a written form, taking all the data and the balance sheet. So they are always taking care of your money. So it is prescribed that you should first get aware about the market, what it is and how it is investing, where it's going, or where your money would be deployed, so that you can also explain. And there's always a hurdle that explaining to parents is much difficult, because they are in the old 90s stage. But yes, if you are aware, and if you think it's much better option than other investments like savings or FD, which are giving you 3 to 7% or 6% of return, so you can always start with a small and see how it's things going well for you, because it's always come with the market risk as well as the tenure of your goals. So if you have a tenure of, let's say, 3 to 5 years of your goals, So you can definitely go for market link products. But if you have a tenure of lesser than that, I won't be recommending you, as the market cycle changes drastically, and you can always start investing in indexes. So you do not have to study all the things, you do not have to follow the market regularly, and the indexes would gauge you returns on a longer term basis of 5 to 10 years. So that can be a wonderful investing starting as an early career growth. Anyone else have any questions regarding investing or regarding budgeting or anything which comes into your mind while you are trying to save things? So if you see the cash flows, people get salary when they are into corporates, but if you see as per your current circumstances, there is always a lifestyle expenses, rental. You might plan for domestic trips where nearby you are trying to go. We just start with small by making a budgeting for you, how much you should spend on a regular basis, what are your visual expenditure you could cut off, and try to save in a much better way using your any of the things like SIP or any product which you like as per your risk appetite. And you must be aware before investing, because financial markets are always linked with a risk. And definitely, I would recommend everyone to go through a book or a website I will be sharing through, so that you can see how interest comes into your financial market or how much you want to learn about things. And all the books in the site from National Institute of Securities Management are completely free. That would help you in a career growth also. I have shared you a link. Nowadays, there are many tools which are coming into picture, like Jupiter as an app. They are using the money efficiently tools for regularly mapping it out. But yes, whenever you are spending money nowadays, you are spending in a virtual manner. You can see in your Google Pay app or wherever you are spending. You can just note it down for a month, so that you can also get aware where all money you are spending out and how efficiently you can cut down your expenses, or what's the better way in which you can use your money for your growth. It's not about just spending money on your needful activities. You can always start investing or using for your leisure activities in which you find growth in your life. But you need to take care of that. You get all things in a single roof, and you should use your money very wisely, so that all the short term and long term goals are do not affected from this. So you can see a website link which have more than 20 to 30 books of financial markets, and the it's completely free. Whatever subject or whatever course you are looking for in future, you can just look out for your book and just read it out. It would be very beneficial for you to getting aware about the financial markets.
Uh, Thank you so much, Ashish. I think we don't have any more questions. So maybe we can end the session. Also, thank you so much on behalf of the pod team and also MentorCloud team. Your strategies and the kind of very simple and yet effective financial strategies what you shared is very interesting. And I hope the students here who have heard, they have got some clarity, motivation, a little bit of motivation, and how they can actually practically plan to control, save their money. So I think thank you so much for that, and keep doing the great work, Ashish, for helping out people in managing finance. That's a very great thing in today's time, actually. And for all of you, stay smart. And I think you have all learned something to learn, like financially be aware about your finances. And if you're in college, also how you can save. And for the basic kind of a thing, the rents and all, the traveling, as Ashish mentioned, all those kind of things can be used. And thank you so much, Ashish, for this webinar. Thank
Thank
you.
you so much, Riddhi. I appreciate that I got an opportunity to speak to all. And whenever you want, you can connect through LinkedIn or any other means. And if you want any guidance or any career advice, definitely we can connect, and I can share you my experience and what all things you need to do or how things works in corporates. It would be much beneficial for you as students or starting a career, early career growth. And thank you, ma'am, and thank you every participant who has been there for a while.
Thank you so much, everyone.